Hello, everybody. Welcome to Wednesday. The S&P 500 was down 1.1% today, mostly caused by the Federal Reserve governors and whatnot coming out, doing interviews, talking aggressively about raising rates because of all the job growth, maybe keeping up longer and what have you. And it's a little bit frustrating to me because if you look at what happens when Chairman Powell speaks, he's been a little bit more softer in his question and answer periods for the last couple that we've had. The market has gone up. He's talked about the possibility that we don't have to have lots of job losses in order to create a lower inflation environment. Unfortunately, today, that's exactly what they were saying is, hey, we got to create job losses in order to knock down inflation. And I think the difference is between, what they're saying is number one, I think a lot of the Fed governors are trained and, like I have been, to look at the past history. And the last time we had big inflation was the 1970s. And yes, lo and behold, in order to bring down inflation, we had to create job losses. But we didn't have a pandemic in the 1970s. And Chairman Powell's been talking about more, hey, this is a unique environment. This is a different situation. So I think we have to let this play out because so far we're on the right path. We are creating jobs. Earnings are coming in at better than expected. And we have a situation where the market is actually responding fairly well so far this month or so far this year to this, motion. And we could have sort of an offset where, there's enough pent up demand to offset a really deep recession. And we could kind of go along and continue to have earnings surprise to the upside like they have been. Because believe me, what I've been reading at the end of last year was all super negative about how bad this first quarter was going to be, how bad the next quarter was going to be in this year. We're going to have this huge downturn and those types of things. That has definitely not been the case. Earnings have been better than expected. And now this job growth picture scares the market in the sense that if you're kind of that old style looking back at the 1970s, you'd think, okay, this is going the wrong direction. The Fed's going to have to raise rates so much that they're going to go too far, which they've done many times before. And it's a justifiable fear that the Fed has made mistakes before. But this Fed so far has been responding to the data. They have been moving down in terms of the rate increases. They went from 3/4 to a half to a quarter point. And so, they're doing what they need to do. And the inflationary scenario has been responding. It's getting better as far as that goes. So I think this is something that could allow the market to continue to do okay. Unfortunately, there will be some at least day-to-day, if not week-to-week volatility, just because of this kind of uncertainty that's happening. We're not on that normal, smooth glide path that we were for quite some time, prior to the pandemic. So all of this is just about kind of unwinding the pandemic. It's still going on, and certainly, will probably be going on for a little bit longer. But that doesn't mean we can't have a scenario where we have a decent stock market, and we have had so far this year. So looking forward to seeing what's going to happen tomorrow. I think it'd be very fascinating to see how this week continues to plays out, especially in the area of earnings. And we'll talk about that then. Thank you very much.